fun day. Certain stocks moving in very strong directions. Let's get right to today's market action. We have Yudi Chang. He's Ace Investment Strategist, chief trader, who has 4 investment ideas for the current market performance you can put to work right away. Ken Moraif is warning investors a bear market may be on the horizon. Bobby Acino's in the pits of the CME, but we want to start with Joe Link, Ken, and talk about this extraordinary IPO, JD.com. Joe, I was trying to describe it to somebody, and I said it's kind of like Overstock.com. Have a whole lot of stuff that they sell on the internet. They're still not making money, by the way, still not profitable, but what's the latest on the IPO?
Well, that's true. They're not profitable. They're more like the Amazon, I would say, of China, more so than Alibaba, that's for sure. You know, they did very well today. We saw it pop about 15%. I spoke with the former COO, who's now the CEO of JDMall.com. That's the biggest revenue generator for JD. And he says that they are actually inching towards profitability. When I asked him about, you know, how this Chinese economy and the bumps in the road that we're seeing could affect his Chinese consumer that he's depending so much on, he told me that he doesn't expect any problems because the middle class is growing outward. And if you look at their numbers, 63% growth in revenue in the last the early 9 months of 2013. You have billions of dollars worth of merchandise volume swishing around. So a lot of potential for JD.com. I also asked him, what does he think of Alibaba? Any advice for Jack Ma? He says it's a good time to go public as a Chinese company here in the U.S. Guys?
Well, yeah, and he picked, JD's company CEO picked the NASDAQ. We'll see if Alibaba's CEO picks the NASDAQ or the New York Stock Exchange. Thank you, Joe Ling. We have Gap earnings out right now. Let's get right to Ashley Webster. How'd they do?
We do indeed, Liz. All right, a beat on the top and bottom. EPS coming in at 58 cents. As you can see, the estimate on EPS was 58 cents. The revenue at $3.77 billion. 3.71 was the estimate. So a beat for Gap on the top and the bottom. The early Easter and warmer weather doing marvels for the apparel retailer there, bringing more customers in. So positive signs. We know that Old Navy had shown a lot of strength in April. We'll have a look at that report. Just also wanted to mention on Hewlett-Packard, guys, they have announced that the number of jobs they are eliminating, they are estimated at 34,000. They now say that they're going to be laying off 50,000 jobs at HP in that effort to really cut costs and turn that thing around.
Oh, dear, what a shame.
It's a lot of jobs.
All right, let's go right to our panel. First of all, I want to talk to Yudi Chang about what happened with Gap. You know, there was a lot of death knells written for the retail sector last week and the beginning part of this week, but now they're coming along quite well, Yudi.
Yeah, absolutely. Especially you look at Gap. Basically, they're very fast to recognize customers' needs, right? And they're very solidly beating their competitors, whether in good or bad markets. Back in February, March, sales was horrible. April picked up tremendously. I think it's a very good specialty retail companies with a niche. I like it. I like it a lot going forward.
Okay, but what do you like about the markets, Yudi? Let's get your picture first, macro, and talk about how we had 2 really strong days for the bulls. Started to wane a little bit in the last hour of the session here, but the day before it was a really ugly day. How does an investor play this?
Yeah, if you think about it, Liz, that's why there's 2 schools of thoughts, right? One thought is saying, the big one's coming with a low VIX, with the market hadn't had a correction 10% or more for a long, long time, and with the bond market yielding so low, so that's all signs of bad things to come. But on the other hand, Liz, I think the market is already in a sideways rotational correction. If you look at it, internet stocks down about 17% or so, autos down 10% or so, small caps down 10% or so. We have been in a correction. I think we just have to through this correction. When the earnings picks up a little bit, maybe in the third quarter of this year, market will resume its upward trend again. So I think right now,
Chino at the CME, I got to bring you in here because Hewlett-Packard surprised us all by coming out early. The stock is trading down. You call Hewlett-Packard a buy the correction stock. Explain.
Well, I'm a really big fan of Meg Whitman. Okay, I love Hewlett-Packard because Meg Whitman is there. It's really difficult to come on TV and say that I really like a stock right after you said they're laying off 50,000 people.
It's true.
But that's part of the reason I really like the stock, right? Hewlett-Packard has been sort of an unwieldy company from a cost structure basis. Nobody's better than that, in my opinion, than Meg Whitman. And when that correction comes, Hewlett-Packard will get beat up more than it has already. And I really like the stock there. There could be a PC sales rebound. stupid as that may sound, when Windows stops supporting XP, there's going to be people that have been looking at new PCs, people that are just PC loyalists. That'll be a good time for them to get into that market. It could be all timed right. It's one of my favorite buy the correction stocks when the correction happens.
Well, I'd love to see the PC market reinvigorate, but it may just finally find a bottom. How about that? We'd be happy with that. Let me get to Ken Moraif. It's good to have you, Ken. Let's talk about your picture for the markets. We know we're coming into a holiday weekend, so I'd like to throw out this week, because it's been awfully thin volume and therefore the swings are a little more dramatic. But what do you expect for the next couple of months?
Well, I'm looking at history, and if you look at midterm election years going back to World War II, the period between April and the elections tends to be a downward period, maybe even a correction, although I agree with the other guest who said that we may be in the correction now in a sideways version of it. But historically, what has happened is that we get all the negative ads and we get all the pre-election stuff that tends to affect confidence and creates uncertainty as to who's going to win the elections, et cetera. So the market tends to trade sideways, if not downward. But after the elections, once the elections are behind us, 100% of the time in the midterm election years since World War II, we've seen a rise in the fourth quarter.
Yeah, true.
And the average in those 4 months is about 7%. So I think the year is going to end very strongly, given that dynamic.
Joe Ling, Ken, I want to talk to you about China for a second, because a lot of what happens in China does affect markets here. They had that awful news, another terrorist bombing. That got the attention. What got less attention was the fact that they blew right past their manufacturing numbers. They had extraordinary gains in manufacturing, totally unexpected, because everybody's talking about the slowdown there. Does that mean that China's on a good footing right now?
Well, Dave, I think it's a little bit more of stabilization that we're seeing out of a couple of different metrics this week. Certainly today's data helped for that thesis. But as far as China goes, what I'm really watching is housing and banking. I'm looking at shadow banking and the housing crisis. We're looking at a potential major bubble. And if you're looking at a lot of these stocks on the NASDAQ and the NYSE, they depend heavily on Chinese consumers, and that's where the action's going to be.
Yudi, I don't see you picking any Chinese stocks, but I do see you picking companies that do have exposure to it. For example, Tesla. Tesla has been one of those momentum plays that's pulled back. You like it now. They're starting to say that they will be big sellers in China at some point. What do you like about Tesla that makes you unafraid to get in here?
Well, there's a couple of things. First of all, like you said, the automobile sales in China has been very strong, gaining about 10% per year. Tesla, like you said as well, that actually very popular in China, but never made a concentration into China. So once they start to make that effort into not only China, but if you see the European sales has been up also. That's why I like Tesla. Also considering the fact that it has gone through a correction already. I think that goes back to what you were asking. I think in today's market, don't chase the high flyers. Buying the dip is the way to go.
Ken, I want to talk about treasuries, because there was this rush to treasuries when the market kept going down. You think that's passing a little bit now?
Well, you know, the thing about bonds is that they bore you, they bore you, they bore you, and then they kill you. And so I think we're in a period right now where they're just going to be boring, and we're going to get, you know, a decent dividend compared to cash and other things. But we've counseled our clients we've moved half of our position in bonds into cash right now. And, you know, when the market decides that the Fed is going to raise interest rates, I think that's when bonds may start killing us. But that may be the time to put cash to work. So I wouldn't be buying bonds right now. If you have them, I would keep them. But if you have cash, that's not where I would put it. I'd wait for interest rates to get up around 3%, 3.15 on the 10-year, which probably will be next year. When that comes, I think that'll be a buying opportunity.
By the way, that's going to be on your tombstone. Bonds. They bore you, they bore you, they bore you, then they kill you. That's not a bad epithet. Ken Moraif, thank you very much. Yudi Chang, Joe Ling, Ken, Bob Iacchino. We will see you, Bob, in just a couple of minutes when the S&P futures close. Thanks, guys.
President Obama turning to